Welcome aboard. It is 9:20 a.m. on November 10th, 2021. Everything we do is for educational purposes only. Nothing's to be taken as direct trading or investment advice. This is a segment of the Trade Along Trading Academy. This is the Trade Along Live segment. That is a daily opportunity for traders to really be focused and disciplined in their trading. We're here from 9 a.m. to 12 noon on a daily basis. Should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. Our focus here is on the S&P 500 E-mini. If you're new to trading, we can help you get set up with a trading platform to be able to do business on your computer at home or where you are. Focus on the S&P 500 E-mini, do 2, 3, 4, 5 trades during the morning session. Look to be finished for the day. This service is hosted by Sal Shaul, who is a veteran of the trading floor in Chicago. He's actively scalping intraday for his own trading account, and he is hosting this service as an opportunity point for traders that are looking for better information, better levels, like better levels in the S&P 500 E-mini equal better trades. He is at risk himself. He's a 25-year veteran trader. He is your wingman during this morning session as an opportunity for you to, again, focus on doing 2, 3, 4, 5 trades, banking your money, and being done for the day. That's the concept and idea for traders that are new coming in, traders that are experienced, that want to have better information, better opportunity for their own trading technique, and for individuals that are looking, that have been trading for a while, looking for a way to develop a roadmap to gain consistent profitability in their trading. So we put together this service. It is a trade action, a market action opportunity for you to learn via Zoom, where you hear our voice, see our charts, ask questions, interact live. This morning session, we have guests coming in. Welcome guests. You can find us at tradealonglive.com, tradealonglive.com. You go to that link, it'll bring you into a Zoom registration, register. It'll send you invites on a daily basis to come in here. Join us, assess where you are based on your trading. If you need a trading platform, let us know and we can help you. If you need to develop or want to develop a trading philosophy, a trading technique, my humble opinion is stay away from standardized software. Learn from somebody who knows, learn from somebody who's been there, learn from somebody that can point you in the right direction, somebody that can adjust and tweak you based on where you are and where you'd like to be. Now that is trading as a whole. The concept of setting up an account, setting up charts, setting up order entry is pretty easy. The concept of making money is a tougher one. So we invite you to stay with us, come in as a guest into this Trade Along Live session, see what it's all about, interact. For those traders that have a trading methodology, welcome aboard. Saul's going to give out his proprietary scalping levels as a trading advantage to you, as a trading advantage to him, to you, from an educational point of view, so that you can witness the trade action in and around his levels and utilize them quite possibly as opportunity points for you as he works the morning session and you work the morning session. Saul's looking to do 2, 3, 4, 5 trades this morning. On a daily basis, he looks to do 2, 3, 4, 5 trades. He's actively scalping. He's actively at risk. He's actively at risk utilizing his levels and zones. One of the things I think is important, this is an educational only opportunity. When you sign up for this experience, you are signing up knowing that. So there's no trading advice. There's no investment advice here. This is a live action educational opportunity for you as a trader during the trading days as we go through the morning session together. Saul has a roadmap, which he gives out, which is the proprietary scalping levels, the pivot and other levels on top and bottom of that pivot. He's looking to do 2, 3, 4, maybe 5 trades. He's looking for a minimum trading profit on each trade of 2 points plus. He generally defends his position based on a stop at 2 points. I would venture to guess individuals that are coming in here that are new to this service, whether you're an experienced or new trader, Saul's entries, exits, and stops are different than the ones that you are putting to use right now based on your strategy. Saul has boiled his opportunity down to price action and his levels and zones and the action of price after the opening bell, which is a big factor based on being able to pull money out of the market this morning, is to understand what's happening after the opening bell and how it affects what happens based on your trade, your entries, exits, and stops, and your pre-mapped out levels. That's why Saul calls them levels and zones. So anyway, we're here every day. We have a trading academy that you can go to, which is all the same business here, where you go into a private Zoom classroom and you are mentored and taught from where you are, new, experienced, all looking to develop consistent profitability. That is part of what we do. That is in or on the website. The website is tradealongtradingacademy.com. That's tradealongtradingacademy.com. I'm going to send it out to everybody so that you have it. Review it. Sign up. Be part of the family. Police yourself. Okay? It's tough for us to police everybody. So make sure you police yourself. We do know who signed up and who isn't signed up, but we ask you not to be chased around. Make sure you pick what you'd like to do. Join the family, and let's see if we can bridge the gap for you between where you are, where you'd like to be, and develop for yourself consistent profitability based on your trading. It's not easy to do. If anybody ever promises you ever make any money trading based on what they're doing, run. Okay? Trading is an individualized sport, and we're here to make you the best you can be based on that individualized sport. So Sal's going to be taking over. I'm going to drift into the background. I'll be here. Review the website. Don't hesitate to do that. Catch up on where you need to be based on your subscription, and we'll take it from there. Hey, Pat, how are you? Philip, Roop, Mark. Hey, Mark, I missed you yesterday. You disappeared on me. I know we were looking for you. Hey, KG, Julio, George, John, Joanne, James, Gord. Hey, Gord, welcome back. Glenn, George, Frank, Eric, Edward, Don, Ben, Sandra. Hey, Anand, how are you?
All right, good morning, everyone. Can everybody hear me all right? All right, we are back. Amazing how we lose the whole area got a little problem with our internet yesterday. I guess that's how we can't get out. I mean, used to be able to worry about getting on the floor and not being able to trade. Electricity goes out or something, have a backup. But nobody has a backup to the internet. So we obviously couldn't get out in Chicago. Well, here, some parts of Chicago, not every part of Chicago. All right, let's give you our levels for this morning. Our pivot this morning is 46.63. Support at 57.50. 42.36 and 28. Resistance on the upside at 69, 75, 81, 87, and 95. Pivot 63, resistance at 69, 75, 81, 87, 95. Support below at 57, 50, 42, 36, and 28. Now, we had the inflation number come out this morning, and you can see here the market kind of flushed down a little bit after that number. And bonds, I don't know what's going on with the bond market. Somebody was reading some stuff about how they made a mistake with the bond market. I mean, they're like all over the place with this bond stuff. I mean, all over the place. They don't know what's going on there. No idea. This is a new, well, the 10-year is hitting 148. They're back below 150. The 163 handle in the bonds is very low as well in the 30-year. So very interesting kind of unknowns going on there in the bond market. At some point, maybe somebody can explain it to me. I don't understand it, but it's okay. It'll be explained. Somebody will come up with some theory somewhere along the line and we'll figure it out, right? It's always the case, the theory. But it is what it is. So, well, we don't trade bonds, so that's a good thing. All right, we're just kind of seeing, welcome to some of the new folks that are here. We are trading mini S&Ps. We are scalping the market. We have our levels that we gave out, and if you look at the chat box area, you'll find them. Those are levels we're going to use for a guide for the day, and we can tweak those, we can adjust those, we can add to them, we can subtract from them, we can deal whatever the market gives us at any particular moment in time. We have to adjust to the market conditions. And so consequently, we use those levels as a guide for the day. In addition to that, we have price action opportunities that occur. So the combination of both the price action opportunities and the levels that we gave out gives us opportunities to trade the market, getting long or short, and also trying to scalp the market. We're not trying to hit home runs. We're not trying to take 10 points or 20 points out of these moves. We're trying to get 2 to 3 points, and we try to get about 4 to 5 trades on average in the course of a day. It's a combination of all of that gives us a methodology that we trade. And we also teach that methodology in our education course that we offer. All right. So the market's a little bit nervous because of the the release of the PPI number that came out. So it's trading that way. You can tell the order book's a little bit light, right? I mean, there's only 100 lots up and down the order book. Usually, you get at least solid 200 lots up and down the order book, solidly 200. And then close to the area that it's trading, it's less than that even. So the market's trading a little bit nervous. So keep that in mind and be a little bit patient, and also make sure you keep your stops in place. You never know when they're going to extend one of these things. You don't want to get caught in any one of these moves. Again, we're looking 2 to 3 points on our targets as well as 2 to 3 points on our stops. So a combination of both of those gives us where you're now. That could change with the volatility. If volatility is injected into the market, then obviously that could change a little bit. If you did jump in here and scale in there at the 58 area against our 57, you did just fine there. Nice little rotation here off of the 58 area. Again, we're not perfect, right? We keep saying that over and over again. We have to scale into an area and scale around an area, and everybody scales differently based on their risk tolerance. Like I said, nobody does it the same way. So if you didn't get filled, or if you didn't have that scale, or if you're only trading one lot and have 57, obviously you didn't get filled, but doesn't mean that the level didn't work. Again, there's different ways of looking at things, and this is trading after all. So you have to take that into consideration. We would also tell you that if, we go back down there because we got down to 58 and rotated back up, the 57 is a little bit more risky than it was if we just jumped in there and got it first time down. So if you're more risk averse, you're going to keep that in mind and make sure you adjust your number of contracts to that point, or maybe not even put the trade on at all. Again, that's all dependent on how you what kind of trader you are and how much risk you want to take, and so on and so forth. All right, next level on the upside we have here is the 69. They just kind of drifted quickly down there to that 57 area, got down to 58, and then popped back up. See what it wants to do at the 69 area here. So again, keep that in mind that, you know, everybody trades differently. Doesn't mean that we didn't get it. Just means that some of you got it, some of you didn't. And now we're coming up here to the 69 area. So we'll see what it wants to do up here now. Kind of just drifted slowly up here, coming back up here again. Might test it again after rotating quickly to the downside there, coming back up. Again, the ladder ticket, as you can see, is very, very thin. So keep that in mind, and you know, keep your stops in place. Right? Can't tell you enough to do that because that's very important. We don't want to get caught on any one move and get yourself in a tizzy for no reason. Tizzy means in a bad way. All right. So we drifted up to, again, we're just missing our levels by just that much. Got to hit here to 67.75 and rotated down. We had 69 on the downside, got down to 58. We had 57. So, and now we're coming back down here. We're just missing them by just that much. So be a little bit careful on the upside now and the downside. If you didn't, obviously, you might have got filled on 58 if you were scaled in. The upside here, it's a lot riskier right now, especially if we rotate back up here this time around. So be a little bit careful there around the 69 area. Such as trading. Once in a while, it's perfect, and other times we just miss it by just that much. Can't, you know, wish we could have, you know, Don would have upticked it for us, and bought some more and let it get us filled, and nope, but he didn't. So anytime we miss a trade, we're going to blame Don, not me. Okay, that's what we're going to do. And thank you, Don, for chipping in here for me yesterday. I appreciate it. Thought it was a little weird yesterday morning. I couldn't. I was like, "What's going on?" I couldn't do anything. I'm like, "What's happening?" So I'm like messing around with my with my internet stuff and the router and this and that, trying to get seeing if I messed something up. A wire was crossed or something, and then there's some news that the whole area was affected. So, but not in Texas and not in California. I think Mark doesn't want to put on his sunglasses and get on TV. That's what the problem is. All right, we're coming back here to our pivot. Kind of quiet. Not much going on. All right. So again, we did zip down to the 57 area, got down to 58, then we zipped back up to 69 area. So but again, we're missing them by a point, unfortunately. So we got up to 69, got up to 67.75, and then broke off. Of course, I had my 68s in there. That didn't get filled. So that's unfortunate. Unfortunate. But that's okay. Then again, like I said, now I'm not going to take the 69. It's a little bit risky. Probably if you're want to, maybe take the top end of the range if you are so inclined. But if you're going to take the 69, it's a lot riskier right now than it was 3 minutes ago. If anybody has any questions, please feel free to put them in the chat box area. If you look at the chat box area, we are going to show you the levels that we're going to use as a guide for the day. There they are, Diane, thank you. And they are going to be there, like I said, for a guide. We can tweak them like I'm doing right now. It's all based on the price action, right? None of this stuff, this is trading. So you have to make adjustments based on the price action. Not everything's etched in stone. And that's the advantage you have over a like algorithm. Algorithm would have that 69 in there, and basically, even though we missed it by just that much, they can't make the adjustment. Enter trading day, you have to make the adjustment after. But we can make the adjustment on the fly because that's what we do. Right, that's the advantage you have trading independent of anybody else's. So you can make adjustments. All right, so again, be a little bit mindful of this little area here. Unfortunately, like I said, we just missed it. If you're more risk averse, you're looking at the 75 area as your next level of resistance. The old new high by a tick rule. How many times does that happen? The old. All right, let's see if there's any numbers coming out this morning. I should have looked at that earlier, but let's see. So we had consumer price index, which was inflation, come out, and it was hot. 6% annual. That's hot. So that's put a little damper on the S&Ps, and a little flush there at about 730. And then, but bonds, though, look at bonds. They're just kind of hanging at 163 handle, just killing it. And nothing's bothering them. So again, be careful here. It all depends. I'm not telling you to take it or not to take it. I'm just telling you it's a lot riskier right now coming up here to the 69 than it was when we first got up here 10 minutes ago. There are a couple numbers coming out here. We have wholesale inventories at 9 o'clock and also Atlanta Fed business inflation expectation. That should be a good one, maybe. And then at noon Chicago time, something that might affect the bond market, a $25 billion bond, 30-year bond auction. So maybe that'll affect the market. All right, there's the old new high by a tick. I haven't seen that one in a while. So we do have a couple numbers in about 15 minutes. See what that's going to bring us. Getting ready for early action this morning as consumer price index for October is published early at 7:30. The figure is expected to come in flaming once again rising 5.8% year to year. It came up above that. Actually, it was 6.2, I think. Though some economists even see a 5.9% advance or above, which would be the biggest year to year increase since December of 1990. While the Fed has maintained that the pickup in inflation will be transitory, how long is that going to last? The stance has recently shifted from central and now seeing prices staying elevated into next year. Right. Transitory is a big word. Transitory, that's like 4 or 5 syllables. So it could last a long time. This, this inflation transitory thing. There's a risk that it could go even higher. Oh, really? We've got some unusual distortions with used car prices. That's true. Airfare is going up, hotel rooms rates rising. You could have got a hotel room and even fly for a while there. You can get some surging prices in services. At the same time, you had a snapback in used car prices, and new car prices also went up because of the demand went up with the flooding from summer hurricanes, as well as the lack of chips. And there it goes through the 969 area. Again, we're looking at the 74 area as our next 75 area is the next level of resistance. And it's a lot riskier right now, like I said. So I'm not taking it, even though it could work on the top end of the range, maybe. But it's all right. I'll wait for 75. Let's see. There's a risk it could even go higher, right? Economists expect a core CPI, which excludes food and energy and is the Fed's preferred gauge of inflation, to rise 4.3 year to year. That would be the 5th consecutive month above the 4% level. And if things were to continue heating up, it would prompt the central bank to speed up tapering or hike interest rates sooner than expected. Really? I don't think so. Yesterday, Fed Treasury and ex-Fed Chair Janet Yellen said policymakers would not allow a repeat of the 1970s level of inflation, and attributed the recent price pressures to supply bottlenecks, labor shortages, and heavy consumer spending. Well, okay. How do you fix this bottleneck? Labor shortages. I mean, nobody wants to work. I mean, I can't get my Starbucks to stay open past like noon sometimes, and they're closed on Sundays. Who closes on a weekend? Because they can't get people to work. I mean, what's going on? Heavy consumer spending. Well, you can't buy a car, so how's that going to be heavy? I guess houses are the only good thing that you could buy right now. Right? Cheap enough. I mean, cheap enough in the sense that, in the sense of interest rates are low. So I love inflation. Help my gold stocks. Good. Well, there you go. There's always a bright spot to every negative, right? Always somebody happy when somebody is somebody else's gold mine. Somebody some hole is somebody else's gold mine hole. I don't know, whatever, something like that. The measure uses a basket of goods approach that aims to compare costs of various consumer goods and services. These could include transportation, food, rent, haircuts. Medicare cost, 80,000 items are included in the report. Each month, data collected from the Bureau of Labor Statistics call, visit, and check the websites of thousands of retail stores, professional offices, and other establishments to assess nationwide price information. Specialists then examine the data, for accuracy and make the statistical adjustment based on any given item's value. There. 80,000 items are included in this report of CPI. How is CPI calculated? Basket of goods, in quotes. 80,000 items of that's a big basket. Just in case you wanted to know how CPI was measured. The next electric vehicle maker to hit the public markets is set to make an electrifying debut today. Rivian, RIVN is the symbol, has priced the IPO at $78 a share, above the elevated 72 to 74, raising a whopping almost $12 billion for the biggest share sale of 2022. With market capitalization of $66 billion, Rivian would roughly be on par with Ferrari, Honda. Would be bigger, way bigger than Honda, Ferrari, Lucid, and Fisker. Never heard of them. So they have. That's amazing. It's pretty amazing, actually. Rivian was founded in 2009. The same year he finished his doctorate in mechanical engineering at MIT. R.J. Scrain. So I never said the name. So anyway, yeah, it's R.J. something. SCARINGE. Scringe. Whatever. Scrooge. I didn't know. I never heard of Fisker. Anyway. The EV maker originally set out to make sports cars, but pivoted to electrical pickup trucks and SUVs due to the growing popularity among consumers. Over the past 2 years, the company has burned through cash about $2 billion in the first half of 21 alone to retool its factory and prepare for large-scale production. Rivian hopes to launch 3 models by the year end, including an electric pickup called the R1T. Deliveries begin in September. The midsize SUV, so R1T is for truck, I guess. The SUV is R1S, and an electric delivery truck designed and built by Amazon. Right, so we got up to 71 and change there and rotated back down. We're looking at the 75 area next. Rivian outlined its ecosystem in advance of the IPO, which includes vehicle technology, the Rivian Cloud, product development, analytics, accessories, and services. The ecosystem, which also details plans for a charging network, is described as competitive in the comparison to its peers. Rivian estimates its total addressable market of $9 trillion, and its serviceable available market is $1 trillion. Okay. It's interesting. I've never seen the car though. I have to. I'm looking to buy an electric car next. I mean, I figure what the hell it's going that way, right? So Tesla that's a nice car. I have to admit that guy did put together a nice car. Give him that much. All right, if you did take the upper end of the range there, if you were more risk averse and maybe you took the upper end of the range, you got a nice little trade there. If you were more risk averse and didn't want to take the 69 altogether, I totally get it. We said we wait for 75. Again, everybody trades different. Nobody trades the same. You have to adjust your trading risk to the markets and understand your risk and then adjust your entry points accordingly. So some of you took the trade, some of you did not. I totally get it. Everybody trades different. I'm not saying that everybody trades the same here. So we understand that, and as long as we understand that, that's cool. And so some people say, oh, what's your track record? Well, I can tell you that some people took the 69 and got paid, and some people did not. So what's my track record? 0? I don't know. Was it a bad level? No, but we missed it by a point. If you're more risk averse, blah, 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 So that's a part that I don't get when they ask me about that, because everybody trades differently here. So it's a tough question for me to answer. And I don't try to shy away from it. I just don't have an answer. It's just the truth. All right, and it's upticking here a little bit. It's not even the 9 o'clock number. We'll see why it's up there. I don't know why it's upticking. Maybe they're expecting something at 9 o'clock or not. Where we have 75 here. That's our next level of resistance. Whoa. That's not fair. What? Seriously? Wow. Again? That is not fair. That's not fair. It got up to 375. I mean, at least 74 he could have given us. Oh my goodness. That's really, and then look at the break. Well, guess where my order was? Oh goodness. Inflation is actually good for stocks. Well, it is, but the problem is that's not how the Fed looks at it. And the Fed is going to raise rates, which is not good for stocks. So, on one side, that could be true. And I understand why it could be true. I get it. But the fear of raising rates is a bigger counterbalance to good for stocks, right? And that's where the counterbalance is. I wouldn't disagree in that, but you also don't want a rate, crazy inflation like you got, in the double teen. That's not good either, because it becomes a little bit of a problem. That it throws yourself into a recession afterwards. So that's the problem there. If it gets too crazy. You're trying to control it. You're not trying to let it go crazy. And now you have a reason why it's high, or at least they're giving you a reason why it's high. And they're trying to massage it a little bit and saying it's transitory and we're coming out of pandemic, blah, 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 blah. And so they're trying to legitimize the what's going on here. And, I mean, it is what it is, it is what it is, but I don't know if it's a little, Mark. The problem is they can't raise it a little anymore, because once they start, especially in this situation, and if it doesn't transitorily adjust, then we got a problem, right? If the inflation numbers come down a little bit, or at least, if these bottlenecks, if all these things that they're talking about, so that it's contributing to inflation, adjust just a little bit, then things will be okay. I think they don't have to raise as much, and they'll see that it's okay. So we'll see. We'll see what happens. It keeps us busy. Uncertainty keeps the markets busy. Hopefully it keeps us busy, right? That's all we can ask for. So we're coming back up here. We got a little resistance up here at the 75 area. See what it wants to do up here. All right, coming up here to 75 area. Working at 75 area. Coming back down here, giving it choices here. Again, you can maybe lighten the load there a little bit if you got in and don't like the price action. All right, we're working to 75 again. Gave you a chance there to lighten the load just a little bit. If you didn't like how it was reacting to it, could have scratched some. And there's nothing wrong with doing that sometimes. And then just see what it wants to do here on the rest of this stuff. All right, getting a little bit of rotate again, giving another choice here. Sometimes you just gotta, say, all right, thanks. Not the best trade, but not the worst. All right, trying to turn over, so it's just turning over so slowly, but giving us a little bit. Again, you do have choices, and you don't like the price action, you can always adjust. All right, so hopefully you were able to see what the price action was, adjust to the market a little bit, maybe scratch some, maybe take a little bit less than 2 points. Hopefully you had a little backup up there with the settlement price at 78 and a quarter. So that was your backup, at least my backup. 78 and a quarter, yeah. That's what I was looking at as backup. So kind of stayed below that. All right, I'm getting our nice rotation here against it. Hopefully some of you stayed in, maybe some of you got out. That's fine. Hopefully you took some off, didn't get stopped out. Again, use the backup was the settlement price. For those of you who know what I'm talking about. You never met Bob. The name sounds familiar, and no, I have not met him. But the name does sound familiar. Was he like on TV, did some thing on TV or something? The name sounds very familiar. And I traded in the bond market, and some of the folks who have been there a long time were probably trading in the grain market. So I there was another room, another area which I didn't get into. I don't know. I'm just saying. All right, we're getting a nice turnover here. Oh, okay. So he was in the indices. So again, they also he was at the CME, right? When we were at the Board of Trade. So at the CME had the before they merged, the CME had all the stock indexes, and they were in a completely different address and different building. All right, nice rotation down there to 72. If you were sticking there with your 3 points, hopefully you were able to get some off and take some profits here against the 7. This one we had to work a little bit. This little trade here we had to work. The market didn't run away from us either, so we were able to stick with it and work it a little. Hopefully you were able to do that. I was trying to walk you through it a little bit. And if you were able to stick with it, you were able to make a little bit or maybe even scratch some, which is fine. Remember, there are 3 things that can happen on a trade. You could obviously make money, which is nice, lose money, which is not nice. And the other nice thing is that you can actually scratch the trade. If you don't like the way the market was reacting around a certain level, like we didn't really appreciate how it was reacting against our level initially, and then it kind of gave us a chance to scratch and then rally back up and then came back down. So you have to work that area a little bit. They had to work that trade a little bit. Next level of resistance we have is up at the 81 area now. That's what we're looking for as our next level, and support will be back around the 66. Anybody has any questions, please feel free to ask in the chat box area. We like questions. Can we repeat the levels? Sure. Can we put the levels up in the chat box? There they are. Thank you. Okay, so now we are kind of worked the 75. Again, that one wasn't easy. Sometimes it's easy, sometimes it's not, right? That one you have to work a little bit. Hopefully you were able to stick with it. And if not, I get it. If you got stopped out, I totally get it. And we'll look for our next opportunity. All right, we're just kind of hanging up here a little bit. Next level of resistance we have is up at the 81 area. Support right now would be around 66. We had this number that came out already. The number came out. Not much happened up there with that number. All right, we got a nice little double top there. We get above the 78 area. We might rotate higher, maybe up to the 81. Support right now would still be at a 65 area. Yeah, let's see what else we can talk about here as far as workers at 3 Starbucks stores in and around Buffalo, New York, will be voting today on whether they want to be represented by Workers United and Affiliated of Services Employees International Union. They can't even get enough workers there. How are they like voting to be like on a union? Never in the coffee's 50-year history has it relied on union workers to serve up its lattes, making the rare unionization drive a big deal. The vote will be counted on December 9th, possibly creating the first ever labor among the 9,000 corporate run stores in the United States. You can't even get enough workers in there, and they're like voting to. How is that possible? What am I missing? I don't know. Well, we'll see what happens. No, they're not counting the vote till December, so I don't know why that's even an issue right now. All right, so we got no more numbers today. We just have a $25 billion 30-year note auction coming out at 12 o'clock Chicago time. And pretty much that'd be about it. So nothing that could affect us fundamentally. But again, as you can see here, the market has kind of quieted down a little bit. And again, we focus more in the morning hours to give us our opportunities to trade. So that is what we are looking for. As the day goes on, you can tell here, especially with these rally markets, things got a lot quieter. Not so many opportunities are going to be available to trade, especially the afternoon. Also, the volatility gets thinned out. I mean, it's already thin here. Like I said, we're starting to see 100 lots of another order ticket now. Before we weren't even seeing that, but tell the market's a little bit nervous, right? The way it's trading. No, I don't know. Maybe you can't. Maybe I'm the only one that could tell. All right, so now if we get above the 78, we might have a run up a little bit. If anybody has any questions, please feel free to put them in the chat box area. All right, coming back up here. If we get above the 78, we'll target the 81. I'll wait for the 81 and see that too. It's up to you. Kind of just hanging up here. Support 68 area right now. Seems like it's again, maybe the market was expecting like a really, really bad number for the S&Ps, right? I mean, for the inflation number. I thought it was bad, but maybe they're expecting a really bad one. But I mean, it's still down a little bit, but still it's coming back. All right, we're getting a little move here above the 78. We'll look at the 81 as a little target area. All right, market drifting back down here a little bit, just kind of just bouncing around, not going anywhere fast. It is kind of dead in the water up here. Can't get those follow throughs that you're looking for. That's what happens when they take some of the volatility and the volume out of the market. Just looking for the 81 area as our next level of resistance. Support right now would be around the 68 area. All right, market just chopping around. Not our favorite trade. Let's, like I said, be patient, wait for the opportunities. That's all we can do. 80, 70, 81 is the next level of resistance right now. Support would be down at the 68 area. Right. And like I said, the market does get a little bit, less volatile, less movement. They kind of just move around, low volume right now. And we're almost getting into that no trade zone area where we have to wait till our opportunities are presented itself for us. And that is looking at the 81 above and the 66 for the time being, 68 below. All right, just kind of doing its thing, not doing much. See what it wants to do. Patience is important. And if anybody has any questions, feel free to put them in the chat box area. It didn't come on till like after late afternoon. It was like weird, very strange. Some parts did not even have it till late in the evening. It was like, I don't know what happened. Thanks a lot, Don, for helping me out. Appreciate it. Yeah, I mean, very strange. I mean, they don't even know why. I mean, obviously, they don't know why, but it is what it is. All right, market rotating down. We got support right around the 68 area. Yeah, I mean, it is just like very, very. It's been, yeah, it got down here and just staying down here. Just doesn't know what it wants to do. Next move. I mean, the CPI number came out and it was hot, and they rallied it. So, you know, who knew? But that's what's, so it's, as long as it gives us an opportunity to trade, that's all that matters. We're just kind of quiet. Bonds breaking a little bit. See what it wants to do. Not really affecting us. Bond market's kind of doing it on its own. So, all right, just kind of doing nothing. This is a no trade zone that we like to call. Kind of just bouncing around, waiting for something to happen. So we have to be patient with it. All right, market is just kind of range bound here a little bit. Patience is important. Right now, support would be around 68 to 70 area, and just kind of doing nothing. And we get below 68 right now. Probably want to be, well, see if you get below 68, probably don't want to be long anymore. Again, still range bound, 68 to 70 right now would be a little support. Next level of resistance above is at 81, and this is right now supported at the 69 to 70 area. It's a little chilly out here today. I don't have the fur ones that you have. Vinia, the stock that the stock we talked about that was supposed to be offered at $78 is indicated to open at 120. It's going to have 120 versus 78, so we're already at $100 billion. I like that course there, Tim. I played it. I played it for the first time this year. It's very nice. Yeah, definitely. I agree. Have you tried Stonewall Orchard? Yeah, that's one of my favorites too. That one is this. I played it this year too, and it ranks right up there. You got to try that next year. It's awesome. Yeah, definitely suggest you play Stonewall Orchard. It's pretty. It's pretty right up there with um, Shepherd's Crook. All right, we have definitely pulled the plug on volatility here. So not much going on anymore. But hopefully we've had a couple nice opportunities. All we can do as traders is wait for the opportunities to present themselves. We do not go out there and try to create trades. We have a methodology that allows us to wait for these levels to get triggered. And if they do get triggered, we trade around them. If we then we have to wait and be patient and wait for the next opportunity. Sometimes it happens quickly, sometimes it doesn't. But like I said before, we like to average about 4 to 5 trades during the course of any day. And average is the key word there. Sometimes, obviously, we're going to get more opportunities, and sometimes today, probably not as many. But nonetheless, we like to average about that. So you have to take sometimes the good with the bad, I guess, right? Sometimes we're going to get a lot of trades, sometimes not. But it is what it is, and waiting for the opportunities is very important. We don't like to just trade to create brokerage fees for those people. Don't like them anymore. I used to like them, but I don't like them anymore. What do you mean about the report being hot? Oh, hot means higher than expected on the CPI number. It's not under control. It's basically out of control. So it's it's running out of control. So, transitory. And it's taking its time being transitory, I'll tell you that much. All right, again, support around the 69 to 70 area, and not much going on from there. We get below 68, you don't want to be long anymore. Very, very quiet day. And we got a little action this morning, almost got filled on the upside on that rotation, just missed it by just that much. Then we did get filled, depending on how you scaled in on the downside. And then we just kind of just got up to 75 area and just floated around there. Had to take a little bit of heat on that, but did get a rotation off of that finally. All right. We are stuck in this no trade zone here. And again, we have to be patient and wait for the market to give us opportunities. We'll get back here in a bit.
Hey, a couple quick programming notes. If anybody has any questions about our services here, this Trade Along Live session, information about the opportunity to join Saul in his mentoring service in the Trading Academy, just let us know back in chat and we'll follow up with you. Hey, Rosemary, I brought you back in. You were exited because you hadn't been responsive. So let me know what you're interested in doing so that I can help you out. It's for Rosemary A. Hey, T, and welcome. Hey, Philip B. Hey, Philip, there was an issue in the background, based on your subscription. You just got to check with PayPal. I saw it come across this morning. Hey, Osbeck, how are you? Hey, Canner, how are you? Good morning. Welcome aboard. Hey, John N., any questions? Gary R. Bea, let me know, and Essentra. I'll send out the opportunity for people to review the website and pick what opportunity you're interested in. I like the bundled one where you have the opportunity to go into private session with Saul, learn from him in a private Zoom room. That's the mentoring part. And you can look at it in the service area on the website. We also have the subscription to this Trade Along Live session on a daily basis. And you just went through that, and we appreciate the positive feedback on it. So it's for traders that are looking to have Saul as their coach during the morning session. Saul gives out his proprietary scalping levels for everybody. He gave out the levels earlier. I'll give a quick repeat of those levels. He had 46.63 as the pivot, 46.63. Above, he had 69, 75, 81, 87, and 95. Below, we had support at 57, 50, 42, 36, and 28. Those are his levels and zones that he's using in his own trading. We have individuals that come in here as subscribers. Well, we have guests come in. They roll over to the subscribers. So welcome guests. You can go to the website and figure out, based on the offerings, what you'd like to do based on your own trading, where you are, where you'd like to be. This Trade Along Live session is a window during the morning session where Saul can be your coach, mentor you, provide key information. We call this the Trade Along Live Intensive. We also have individuals that are part of Saul's mentoring, his private mentoring, in a private Zoom room, Zoom classroom. And they come in here on a daily basis as an access point to Saul, again, as their trading coach during the morning session, this Trade Along Live Intensive. So we do it every day. The opportunity is for you to be here also. Focus on doing 2, 3, 4, 5 trades in and around Saul's pre-mapped out levels and zones. If you are interested, come to tradealonglive.com, tradealonglive.com, and join us here in Zoom Live. If you're looking to review our website, which is tradealongtradingacademy.com, tradealongtradingacademy.com, and you can go through the various opportunities and services of the Trade Along Trading Academy. pick which way you want to go. I mentioned earlier that I really do like the concept of doing both, which is the combo deal or the bundle deal of being part of Saul's mentoring work as he takes you into private class, works with you on an individualized basis, takes you from where you are, where you'd like to be based on the concept of consistent profitability. And that is a unique opportunity to work with a 25-year plus veteran of the trading pits in Chicago as you are looking to develop what we call consistent profitability, and coming in here as a proving ground and an access point during this session, which is the Trade Along Live intensive from 9 a.m. to 12 noon, with a body of trading going on between 9:30 and 11:30 a.m. on a daily trading day basis. So that's what we do every day. If you want to upgrade from your Trade Along Live status into adding Saul's mentoring, we can help you through that. We helped a couple of people through already. So that's a very interesting proposition for those that are subscribers already to the Trade Along Live session, this intensive. For those that are looking for a tune-up, looking to really focus in on what they're doing well and what they got to shed, and come in here again as a proving ground for what you're learning in those sessions with Saul in his private Zoom class. For those that are interested in focusing on trading and you're new, or you're just starting out, or you don't have a particular focus based on your trading methodology, then you can certainly spend time with Saul in private class and learn his price action trading methodology, how to set his proprietary scalping levels, and then what to do based on the entries, exits, and stops in and around those levels and zones that he lays out, and you'll learn to lay out for your trading morning. So that's what we do every day. That's what you're invited into. If you like what we're doing here, tell your friends. The link to come right into Zoom is tradealonglive.com, tradealonglive.com. And for those that want to review the website to pick which direction you want to go, or you need to register coming off of guest status, it's tradealongtradingacademy.com, tradealongtradingacademy.com. So we'll see you on the other side. We appreciate you being here. It gets quiet coming into the afternoon because Saul could certainly be in teaching, mentoring traders. Could be you if you decide to do that during the afternoon. And it just depends on the day. It depends on his scheduling and your schedule, his schedule. And we appreciate you being here. And again, if you like what we're doing here, tell your friends. TradeAlongLive.com, TradeAlongLive.com. Thank you.